Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks rally to a new record as jobs data fuels optimism. The US economy's soft landing is on track. The yen gains as the Bank of Japan leaves interest rates unchanged. Mercedes slams the brakes on its outlook, blaming poor sales in China in the latest sign of trouble for German automakers. And new strikes across the Israel-Lebanon border after Hezbollah vows retaliation for deadly pager attacks. Happy Friday. Global stocks at record highs then. The Nasdaq hitting gains and pushing through gains of more than 2% yesterday. The S&P ending up more than 1%. Risk on with the moves across the US session and feeding into Asia. And we'll check in on the Asian markets imminently. European futures pointing a little softer, down 0.3%. The gains came through across European stocks yesterday, more than 1% as well. European stocks still on track to end the week in positive territory. But of course, futures currently down 0.3%. Maybe a bit of profit taking after the gains of yesterday. The FTSE 100 currently pointing low by 46 points, down 0.6%. Consumer confidence data coming out suggesting that the retail segment here in the UK could be challenged. Consumers feeling much weaker, according to the most recent surveys. S&P futures currently looking down by 0.1%, so modest downside coming through given the gains of yesterday. Nasdaq futures off by just 33 points. Let's flip the board and look cross-asset. The last time I checked the Treasury markets, there were modest gains again in terms of the front end, the 2-year. And there you see it, just down 2 basis points, close to 2 basis points, 3.56. Interesting to hear from Larry Summers suggesting that maybe the markets are pricing in too many cuts from this Federal Reserve. 132, almost 133 on the pound. The strength came through yesterday, of course. The BOE standing pat, 132 on the pound. We continue to monitor that currency, just up 0.1% so far in the session. We'll get the breakdown of that BOE decision in this show as well. $74 a barrel on Brent, setting up for a positive week on oil, despite the downside so far in the session, down 0.2%. And the yellow metal, gold, still at those record highs of around 2,593 per troy ounce, up 0.3%. Further gains coming through for the session today. Let's check in on the Asian markets then. It's been a solid session. The focus, of course, has shifted from the Fed to the BOE and today, of course, to the BOJ. The Bank of Japan, unsurprisingly, standing and holding pat with the interest rate decision. That was fully expected by economists. They have not moved the interest rate. We had inflation data coming in hotter or stronger, I should say, than for the first time in about 4 months. So the inflation challenge is still there, but you lift the hood, strip out oil prices, maybe it's a little bit more benign. We wait, of course, for the press conference of the governor of the Bank of Japan coming up in a little over an hour and a half's time. MSCI Asia Pacific gaining 1.3%. A lot of that coming through from the heavy lift of the Nikkei, gaining close to 2% over in Japan. Some optimism coming through in terms of the view on the BOJ. That, of course, could adjust around the press conference. The Hang Seng Index over in Hong Kong, coming up at 1.2%. China keeping those loan prime rates, the benchmark rate, on hold, but new measures coming through, we're reporting, to ease the property sector of China. Currently, the Japanese yen showing a bit of strength as well, up 0.3% at 142 versus the US dollar. Now, the Bank of Japan has left its key rate unchanged. Let's get the details right now, signalling that it sees no need to hurry with hikes after its July increase, of course, spooked investors and led to that rout that we saw in the first part of August. For more on this morning's decision, let's go straight then to Bloomberg's Paul Jackson, standing by for us in Tokyo. Paul, thanks for joining us. Are we still on track for future hikes from the BOJ? Do they still happen this year? What do we read into this decision?
I think we are still on track. What we had today was a widely expected stand-pat decision. There were plenty of reasons to hold for now. The market instability that you mentioned. They don't want to spook markets again. They want more time to assess the impact of that rate hike. And also, we have a leadership election taking place in Japan now. So I think the central bank wanted to be on the sidelines rather than center stage this month as Japan chooses a new leader who will become prime minister. And that means we could have an election coming up. So when you're asking about the likely timing of that next rate hike, Well, October doesn't look too good, does it? If we have a general election in Japan, that's a reason to avoid market instability then with a move, and also a US presidential election. So I think that really turns the focus to, is it going to be December or January?
OK, December or January, as we look at that potential timeline. Really interesting that you fold in the politics as well of Japan and how that could play into keeping this BOJ maybe on the sidelines, at least for October. Talk to us then, Paul, about how the inflation dynamics and the growth picture has evolved for Japan and how that's tying in to the potential next decision.
Well, we are seeing, signs of improvement in the economy. We're back to growth. In the statement today, the BOJ upgraded its view on consumer spending. I mean, it's not great, it's not gangbusters, but it's slightly improved. It said moderate increasing trend. So with more consumer spending, even though you've got inflation, and those inflation figures this morning also, again, well over the nominal target for inflation, suggest that consumers are starting to get used to this inflation trend as wages grow. So I think the way to think of it is the next hike, comes year end. The question then really is how fast the subsequent rate hikes take place. And I think you'd have to wait until we saw more wage data next year to see if the hikes continue at the pace we've seen this year, and if this consumer spending pattern continues to strengthen. Because I think if we see all that on track, then we will be seeing more hikes next year.
OK, Bloomberg's Paul Jackson in Tokyo with really important context around this decision from the BOJ as we count down, of course, to the presser with the governor. And we will dive deeper on the BOJ later this hour with Martin Schulz as well, chief economist at Fujitsu. That's at 6:40 UK time, ahead of Kazuo Ueda's news conference at 7:30 a.m. UK time. Now, Wall Street traders are betting the Fed will be able to engineer a soft landing for the US, spurring a rally in riskier corners of the market, with global stocks hitting that all-time high, of course. Let's get more with Bloomberg's Abhishek Visnoy, who joins us from Singapore. Abhishek, what do you make of the moves stateside and in the Asian session, the upside that's come through for global equities, and whether this has legs going forward?
It does seem to have legs. I mean, definitely equities are celebrating across the world. As you can see, global stocks have hit a record high. Asia is set for its best week in a month. Japan stocks have held on to their gains. So stock markets are actually in a good mood. And let's not forget, BOJ's decision to stand pat has not come in void. You have a soft landing narrative in the US, which is gaining credence. You are seeing hopes of stimulus, probably a bigger, better, bolder stimulus, taking root in China. All these developments put together, are shaping up nicely for global economy, and therefore most of the stock markets are celebrating. If you see, we did our MLIV Pulse survey recently, so the mood remains optimistic. Most of the participants expect value stocks to gain. Now, where is value? Value is actually in those pockets of the market which have not risen to where, say, something like tech or India is trading. So that means, probably FTSE 100, probably a lot of sectors which have been sold into, a lot of names in China. And then if you look at some of the other survey that, say, something like Bank of America conducts from fund managers, there's a lot of optimism for all markets, and Japan and India are right at the top. And apart from this, the pockets which have risen, like tech stocks, semiconductors, they still remain the top bets. So, all in all, markets are in no mood to give this away. But, Ueda's press conference is the next thing to watch out. Last time, the hawkishness from Japan came after that press conference. So if he is able to manage the narrative, then till December, it looks pretty positive for equities.
Yeah, OK, so we look to the sensitivity, potential sensitivity of these global markets again, at least being on alert around that press conference. Governor Oweda coming up 7:30 UK time, given, of course, the tensions that ripple out across the markets on the back of that decision back in July. So we will monitor that, of course, very closely. Abhishek, with the context around the global rally that was seen on the back of that Fed decision, Abhishek Vishnoi joining us out of Singapore with an eye, of course, to that BOJ press. So, Abhishek, thank you for the details. Now to the politics of France. And French Prime Minister Michel Barnier met with President Emmanuel Macron late yesterday to propose a new government. It comes after 2 weeks of tense consultations with rival political groups. From the details, I'm joined by Bloomberg's Caroline Conat in Paris. Caroline, what do we know so far? Are we getting closer to this, what has seemed like, elusive new French government?
We're getting very close, Tom. In fact, after 2 weeks since Michel Barnier was named Prime Minister, we should get the final details of this new government before Sunday. It took 2 months for President Macron to name a Prime Minister, and then another 2 weeks for that Prime Minister to present a new government. So that kind of shows you the complexity of the task when no one has a majority in Parliament. At some point, there was even speculation that Barnier would quit over the past few days. Of course, there was a bit of a poker game there in order to get some more people on board. And there was one last decisive meeting yesterday afternoon. So what we know so far is that we should get 38 ministers, half men, half women, 16 with a big portfolio, including 7 coming from Macron's ranks, the Renaissance Party, and 3 from the conservative Republicans, which is Barnier's party. Initially, Michel Barnier wanted to put more Republicans in that government, but then Emmanuel Macron didn't agree with the first list, tore the paper, and asked Barnier to start again. In terms of names, we have very little details at this stage. We know that Bruno Retailleau, the leader of the Republicans in the Senate, should get the Interior Ministry, and Jean-Noël Barrot, who was European Minister in the previous administration, should get promoted to a Foreign Minister, but we don't have the name yet for the crucial Finance Ministry portfolio after 7 years of Bruno Le Maire.
OK, so we need the names to be confirmed, we need this government to be confirmed, and then, of course, the markets will be watching as to whether or not that government can hold and be sustained, given the divisions within the politics of France. And the risk premium is still there for government, or at least French assets, over their German counterparts, particularly around sovereign debt. So what is next, Caroline? What are you watching for next?
In the short term, the market reaction should be quite muted because Barnier did manage to form a government. Obviously, this would have been very different if he had decided to quit. But we should have the finalist by Sunday. Then Michel Barnier should do a general policy speech on October 1st. That's where he could potentially face his first vote of no confidence. And straight after, of course, you have the big deadline of the budget. Initially, it was supposed to be October 1st, but Barnier has asked to push that deadline to October 9. And over the past few days, there was actually a spat between Barnier and some outgoing ministers from Macron's camp about whether or not to raise taxes, because Michel Barnier has warned that the budget situation of France was very serious. So he hasn't totally ruled out increasing taxes for the wealthiest, for some multinationals, and perhaps an increase of the inheritance tax. But he has promised that he will not raise taxes for the middle class and for those who work, which obviously is a way to get also some support from the center left, who are asking for more social justice and a better share of the country's revenues.
OK, Bloomberg's Caroline Conat in Paris on the latest developments there as we look to potential confirmation of that new government. Caroline, thank you for the update. Here's what else we'll be thinking about today then. 7 a.m. UK time, we're going to get the data around UK retail sales. This after consumer confidence here in the UK crashed in the month of September by the most in 2.5 years. The government being criticised by some for doom-mongering around this UK economy. That data dropping 7 a.m. UK time. 7:30, it is the press conference. The governor of the BOJ. We will be scrutinising, of course, his comments and bringing those lines to you live. And at 4 p.m. UK time, We're going to be hearing from the ECB's Christine Lagarde. She will be speaking alongside, it seems, Michel, or in fact, delivering the Michel Kandisa Central Bank lecture, followed by a one-on-one conversation with Kristalina Georgieva from the IMF, where, of course, Christine Lagarde was formerly the head. So that conversation will be coming as well. Anything she says, of course, about the Fed's cut and what that means for the ECB will be of interest. Coming up, switching focus, Hezbollah leader Hassan Nasrallah calls Israel's suspected attacks using telecoms devices, quote, a huge security and humanitarian blow. We have the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, it's been reported that Israel has launched fresh airstrikes on targets in southern Lebanon. Meanwhile, the Secretary General of Hezbollah has said the mass explosions of telecom devices, so the pagers, of course, and those walkie-talkies in Lebanon was, quote, a huge security and humanitarian blow.
This will be confronted with a severe reckoning and a just retribution, in expected and unexpected ways. But because this new battle involved hidden hands, let me change my approach. I will not talk about a time, a form, a place, or a date. Leave the subject, and the news will be what you see, not what you hear.
And of course, Hezbollah is a designated terrorist organisation by the UK, the US and others. Let's bring in our Horizons Middle East and Africa anchor, Jemana Pasechi, for the details. Jemana, your reaction to what we heard from Nasrallah then, and whether or not it takes Israel and Hezbollah closer to a full-blown conflict?
Well, this was the first time the world was hearing Hassan Nasrallah speak since those telecommunication devices exploded in the last couple of days. The Lebanese health ministry now putting the death toll at 37, with thousands injured. And what Hassan Nasrallah did say, he conceded that it was a massive security and humanitarian blow. He blamed Israel for those attacks. But then he also went on to say that whatever happened wasn't going to deter them from exacting their own revenge. He said that the only way that they would halt attacks is for Israel to stop the aggression on the people of Gaza and the West Bank. So quite explicitly linking Lebanon and Hezbollah's actions directly to the situation in Gaza. So quite explicit there. Now, during the course of the speech, multiple eyewitnesses and sources did report that Israeli planes were flying over Beirut, breaking the sound barrier. And over the course of Thursday, we did see even more exchange of fire and rockets being launched from Lebanon into Israel. The Israeli military reporting that 2 soldiers were killed in those attacks. And we also saw similar rockets being fired from northern Israel into southern Lebanon as well. And so it does appear, if you piece together everything that has happened this week, from the explosions themselves, the blame being directed towards Israel, the language that has come out of the defense minister, and the speech out of Hassan Nasrallah yesterday, that we are moving to another phase. And yes, there is certainly concern that things could even deteriorate further from here.
And Jemana, look, we seem to talk about this on a weekly basis, the prospects of a peace deal involving Gaza, involving Israel and that conflict with Hamas. We know that Secretary of State Antony Blinken continues those negotiations, but reporting from the Wall Street Journal suggesting that policymakers, at least officials in the US, are becoming increasingly pessimistic about the prospects of a deal. Where do we stand right now in these negotiations?
Yeah, well, this is it. And what Israeli officials have told Bloomberg, and this is according to our reporting, is that they are really concerned that the path for diplomacy is getting narrower and narrower, especially when it comes to the situation on the northern border. If they didn't believe that there was some form of hope for a diplomatic solution, then they wouldn't be saying that they're mobilizing forces up in the north. The language out of the defense minister this week has been very, very strong on that front. And even the Wall Street Journal are reporting that the Defense Minister Lloyd Austin has privately started to express concerns about Israel preparing themselves for a full-blown offensive into Lebanon. Now, of course, the U.S. are trying all angles in the diplomatic solution on the Lebanon border, but then also still trying to get that ceasefire deal across the line. The Secretary of State, Antony Blinken, was in Cairo earlier this week, and he is urging all parties involved to de-escalate. And just in the last 24 hours, he also is back in Europe, met with President Macron. They discussed the situation in Lebanon. And interestingly, President Macron actually left a video message for Lebanese people overnight saying war is not inevitable and no cause merits triggering a conflict in Lebanon.
Okay, Jemana Besechi, thank you very much indeed. Our Horizons anchor with the latest in terms of what continues to unfold in the Middle East and the rising tensions there. Jemana, thank you. Switching focus and what is coming up next. Hydrogen, supposed to take the clean energy world by storm. The promise, though, is running out of gas. See what we did there? We're going to take a look at what has happened to the prospects around hydrogen. Break that down for you. That is next. This is Bloomberg. Welcome back. Hydrogen was once predicted to take the world by storm as a major clean energy source. The industry, though, is now facing a reality check. Here to explain is Bloomberg NEF analyst Kathy Gow with the details and the analysis. Kathy, the hydrogen market, then, it has not lived up to what were pretty lofty expectations. So what has gone wrong?
Yeah, that's right. So let's first take a step back to think about why people care about hydrogen in the first place. So hydrogen could be used to decarbonize a lot of sectors that can't be electrified, like aviation, shipping, heavy industry, and people can get subsidies by building these projects. Well, the problem right now is that while there's a lot of people that want to sell hydrogen, very few companies have actually committed to buy hydrogen because it's still pretty expensive. And that's why only 5% of the total clean hydrogen capacity plan over the last 5 years has actually been financed. And one reason why clean hydrogen remains still expensive right now is because electrolyzer, which is the equipment we use to make green hydrogen by water electrolysis, is quite expensive. And according to our latest report, electrolyzer will remain expensive for much longer. And that also means that clean hydrogen will actually become less competitive than a lot of people would have thought.
Where does this leave? I know that China has a significant build-out in terms of its clean energy capacity, whether it's solar or wind, and that is having global implications. Where does China stand in hydrogen production? Are we set up for another kind of clean tech set of tensions between China and the rest of the world on this front?
Yeah, it certainly is. So electrolyzer made in China is around 75% cheaper than those made in Europe and the US. And that's why a lot of the Chinese companies want to export their products abroad to get a good profit margin. And this has become a problem for a lot of Western manufacturers. And they have been actively lobbying against the import of Chinese product. And some of them has been partly successful in Europe, for example. So this has become a real question for the European politicians. Do we want to have cheaper clean hydrogen so that we can speed up decarbonization? Or do we want to protect local manufacturers with the results being higher costs for longer? And the difference between these two options is actually huge. For example, if Europe doesn't allow Chinese manufacturers to come in and compete, electrolyzer costs in Europe could remain 50% more expensive than if they do.
And that is a live debate within the EU right now around the shift to renewables and the role that China should or could play. Bloomberg NEF analyst Kathy Gow with some fantastic deep dive takes and context around what's happening on the hydrogen piece of that story. If you want to hear more analysis from our fantastic team at BNEF, download the Switched On podcast. You call it BNEF if you want to, BNEF, on Apple or Spotify. There's plenty more coming up. Stay with us on the UK. This is Bloomberg. Good morning, happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks rally to a new record as jobs data fuels optimism. The US economy's soft landing is on track. The yen gains as the Bank of Japan leaves interest rates unchanged. Mercedes slams the brake on its outlook, blaming poor sales in China in the latest sign of trouble for German automakers. Plus, UK consumer confidence tanks, dropping by the most in 2.5 years. It's an unwelcome backdrop for Prime Minister Keir Starmer at this weekend's Labour Party conference. Let's check in on the markets then. A bit of a breather coming through across these markets. Futures pointing lower after the upside that we saw yesterday in the US, in Europe. Gains across European stocks yesterday of around 1.4%. The Nasdaq closing higher by 2.5%. The S&P up by 1.7%. But some profit-taking, it seems, or at least a bit of a breather, again, given the upside and fresh records that came through yesterday. European stocks down 0.4%, flagged lower by 0.4%. FTSE 100 futures pointing low by 48 points. The weakness around the consumer, at least the emotions, the feelings of the consumer here in the UK ahead of those retail sales. They drop at 7 a.m. UK time. S&P futures pointing lower by 0.2%. Nasdaq futures pointing down by around 0.3, looking to lose about 53 points. The former Treasury Secretary Larry Summers saying markets are pricing in too many cuts from this Federal Reserve. So let's flip the board and have a look at what's happening in terms of triple witching. A reminder for you today, it is triple witching day. And on average, you see about a 245% jump in volumes on average on a day when you have triple witching. Happens about, 4 times a year? It's the expiration, of course, of options, futures and contracts. So you could see a big jump, of course, in those volumes today. So just bear that in mind. That's some of the historical context on Triple Witching Day. Let's flip the board and look at cross assets. You have seen moves around the Japanese yen. Modest strength, just up 0.2%. That's given some relief, it seems, to equity traders in Japan, where the Nikkei has rallied so far in the session. The US 2-year, meanwhile, at 356. Just down 1 basis point. The pound in focus ahead of the retail data, 132, close to 133. The Bank of England, of course, staying and holding pat yesterday with its rate decision. $74 a barrel on Brent, down 0.3%, but expected and still set to end this week in positive territory. And gold remaining at those record levels, 2,594, up 0.3%. Let's get to a key corporate story and a reminder of the tensions in Germany around the auto sector right now, because Mercedes has slashed its outlook for the year, citing a rapid deterioration of its business in China. The German luxury car maker now expects its adjusted return on sales to be between 7.5 and 8.5%, compared with a prior forecast of as much as 11%. For more, I'm joined by Danny Lee from Bloomberg's Asia Transport team. Danny, once again, it seems that China is at the centre of these challenges around German automakers. Now it's Mercedes. It was BMW. They came through that surprise downgrade. Now it's Mercedes. Talk to us about the challenges that this company faces when it comes to the Chinese market and the broader issues for Mercedes.
Yeah, I mean, for Mercedes, this just adds to yet another German automaker facing challenges. As you've just mentioned, BMW, Porsche, Volkswagen, not all with the same issues, whether it be supply chain, sales, particularly the pivot to EVs, but clearly in China, where there has been a slowdown in purchases and rising competition, this is a challenge for the likes of the luxury car makers and also just the mainstream brands having to navigate particularly one of the biggest auto markets, and how do they maintain their sales, let alone even try and compete against a very vociferous and very active competition such as the Chinese brands. And so we see these German automakers having yet more challenges, and yet it speaks to the trouble of these German brands trying to pivot as they try to pivot to EVs and delay their own targets on that, and then just trying to navigate the latest challenges. And so these 4 brands in particular, but may we see more, for example?
Yeah, there has to be the question, doesn't it? Are we going to see more lines drop from some of these automakers across Europe in terms of the potential downgrade to the outlooks for these companies with that China exposure? Meanwhile, on the conversations around tariffs, that's another threat for both sides of the equation, both Chinese automakers, of course, and potentially European car makers if they're manufacturing in China. What do we know about the negotiations between the EU and China, and to what extent those are moving in a positive direction, Danny?
Yeah, I mean, this could be, potentially has implications for even the German automakers, for the troubles that they're all facing. But we heard from Beijing and Brussels yesterday on Thursday talking about intensifying talks as this deadline looms of this point of no return on tariffs that Brussels wants to impose on Chinese EVs and imports. And so there seems to be a stepping up here of talks, and potentially there could be a meeting of the minds, and particularly something China is focused on is potentially a pricing floor, potentially controlling the pricing of EVs going into Europe, given how low the EVs can cost, and also potentially controlling the volumes. It's not something that Brussels has been in favour of in the past, but we seem to be heading in a slightly more positive direction of finding some consensus. And so we'll see this vote come through potentially, or it may be delayed as soon as September 25th from Brussels. But we'll have to wait and see. And clearly this is going to be a big sticking point on how to resolve this.
Yeah, indeed. So those negotiations continue, and we look potentially to September the 25th. Bloomberg's Danny Lee, always fantastic on the auto space, particularly when it comes to the China challenge for these European automakers, and a reminder of that challenge coming through from Mercedes. Danny, thank you for the update. Meanwhile, to the UK, where consumer confidence nosedived in September, dropping by the most in 2.5 years. That takes you back, of course, to Russia's initial invasion of Ukraine. The reading comes amid dire warnings from the new government about tough decisions. We've heard that multiple times, haven't we, from the Chancellor and the Prime Minister, that need to be taken to fix the public finances. The Chancellor warning of more pain in her budget next month. Joining me now is UK correspondent Lizzie Burden. Lizzie, let's start on the consumer confidence. I mean, it really stood out. I mean, it's a really bleak picture in terms of how the consumer is feeling. And some of that, it seems, is tied to the rhetoric that we've been hearing from this new government.
Yeah, the price of the doom and gloom from Keir Starmer. Many asking why he didn't take that honeymoon period and enjoy it for longer when you haven't had a Labour government for so long here in the UK. These numbers, so you see, falling sharply for consumer confidence in September, wiping out the progress so far this year. As you say, it is as consumers brace for that painful budget. We've got Labour Party conference next week. I'm going to be heading up to Liverpool. Will we get more detail on what Rachel Reeves is planning to do? But the month-on-month fall in this survey was the biggest since October last year, when you had mortgage rates near a peak. This kind of spells trouble ahead that we'll see in the retail sales data, perhaps ahead, but we also will this morning get the backward-looking retail sales data.
It's quite the swing, isn't it, in terms of sentiment from our politicians? We've kind of gone from the fluffy, exaggerated optimism of Boris Johnson to this dour negativity of Keir Starmer and Rachel Reeves, as you say, the doom-mongering that they've been accused of. Talk to us about the data out of the UK. We've had the consumer confidence survey. We get retail sales. What's the expectation? They drop at 7.
Yeah, I mean, just on that, you have to ask whether Labour could have got away with the boosterism of Boris Johnson, and they obviously think that laying out the gloomy picture helps roll the pitch for what they are going to do in the budget. This retail sales number that we're going to get at 7 a.m, the expectation is that it will have picked up in August thanks to the warmer weather. Of course, we also had the first Bank of England rate cut in August. And our economists reckon that that will have boosted the spending power of nearly 20% of households who are on variable rate mortgages. You also have people with more money in their pockets because of the cut to national insurance contributions, and you had that rise in the national living wage. So the people on that are those who actually prop up the high street, and hence the boost to retail sales that's expected in August. OK, so the retail sales number is expected to come in slightly better given those factors. You have to wonder, though, given the consumer survey that came through overnight, whether or not the BOE, or at least some members, will be thinking that Swati Dingo had a point, that they need to go again. What is the analysis post that BOE decision to hold rates? The Fed's cutting 50, the ECB's gone twice, the BOE is being stubborn. I think it's a good point that the BOE wouldn't have known what the Fed was going to do, but of course the market signalling suggested that a half-point cut was coming, and indeed they didn't follow the Fed's lead and cut rates yesterday. An 8-1 split, more hawkish than expected, just Swati Dingo, as you say, voting to cut. But interesting, if you look within within the 8 who voted to hold, the majority view was that more cuts are needed ahead. So it doesn't kind of raise red flags about a November cut. That's still the expectation, but caution very much the vibe here in the guidance. No press conference, but Andrew Bailey saying we need to be careful not to cut too fast or buy too much. The guidance saying that a gradual approach is needed ahead. Interesting on QT as well, on the balance sheet, deciding unanimously to keep the pace of the runoff at £100 billion a year. I say this because it feeds into the budget. Our chief UK economist, Dan Hansen, reckons that this is going to give Rachel Reeves £4 billion of a lifeline when it comes to the budget, and she needs every penny she can get.
Certainly sounds like it, doesn't it? Lizzie Burton, thank you very much indeed. Always excellent, of course, our UK correspondent on the details around the BOE and looking ahead to that retail sales data print. It drops in about 20 minutes' time. Now to some other stories making news this Friday. Nike has ousted its CEO, John Donahoe, and is bringing a long-time executive, Elliot Hill, out of retirement, dusting him off as it tries to return the struggling brand, which is looking a little tired to some, to its glory days. Hill joined Nike in 1988 and served as president of Consumer and Marketplace before he retired in 2020. Nike slashed its revenue forecast in December, losing ground to some upstart competitors. Bloomberg has learned that the German government has started an internal probe into its handling of the Commerzbank share sale. This after the transaction allowed Italy's UniCredit to swoop in and take a major stake, of course, in the lender. We understand the office of the Chancellor isn't happy with the outcome of the placement last week, which was overseen by Germany's finance agency. And Bloomberg understands that OpenAI's latest fundraising is nearing completion, with prospective investors set to find out today whether they will be part of the deal. The $6.5 billion funding round for the AI startup is oversubscribed. One source told us the excess demand was in the billions of dollars. Coming up, the BOJ signals it sees no need to hurry with hikes as it holds rates steady. Our interview with Fujitsu chief economist Martin Schulz is coming up next as we look ahead to the central bank's press conference. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Bank of Japan has kept its key rates steady as expected. Markets are now waiting for Governor Ueda's press conference due shortly for any hints on future policy. For analysis, let's bring in Fujitsu chief economist Martin Schulz. Martin, thank you so much for joining us. Always fantastic to get your analysis. What do you make of the decision then to stand pat? Economists had, of course, expected this, Martin. Is this, though, a BOJ that is a little bit scarred by that decision back towards the end of July?
No, that was a test, and it kind of went well. It was really about getting the yen way stronger than it was at 160 and beyond to the dollar. It needed to be around 140. Now at 142, it is actually where it should be. So the Bank of Japan is not so much driven by the exchange rate anymore. It can now focus on the economy and where it wants to go in terms of normalizing policy. So it was not unexpected that it is quite quiet today.
OK, so a victory on that front in terms of shoring up the Japanese yen as we look at it at 142.20 right now, so up 0.3% in the session. Martin, what is your expectation then if you push out towards the end of this year and into next year, the space that the BOJ has to raise rates in this cycle for a third time? When does the next hike come, do you think?
Well, the Bank of Japan clearly wants to further normalize policy. Normalization means going away from 0% as far as they can get. The next step would go towards 0.5%. This would already be something where the Bank of Japan would like to be in the longer run, going up even to 1%, to have a kind of rate where you can work with. The problem is the economy. It is cooling. Inflation is still high at 2.8% core, but core with except energy, it is just about 2%. So no reason to act on inflation right now. So it is now really about, well, is the economy behaving well, improving well? It has been cooling. The question is now how much. This is why everybody's looking at the press conference, how optimistic the Bank of Japan will be.
And to the press conference then, the here and now, of course, the countdown to that in about 40 minutes' time, Martin, what are you going to be scrutinising when it comes to the comments from Ueda? What language are you looking for? What kind of signals are you going to be on guard for?
Well, there can't be too much in terms of hawkishness for inflation when the Bank of Japan wants to go further with rate hikes. Expectations are for the end of the year. I would think more early next year because we have a packed political calendar here in Japan as well. So the comments of Mr. Ueda about the economy and how well it is, well, cooling in a way, but how strong it will continue to be. We are going down to a growth rate around 1% next year. There is very little debate about it, but how well consumption is doing while higher wages are already priced in by July and how much investment is happening. We are quite a bit optimistic on that. So there would be room to move if there's time to do so.
And you touched on the politics, Martin. Is this the Bank of Japan that's boxed in by the political calendar, or can they look through the elections that are upcoming in Japan?
Well, it's almost as hard, if not harder, than in the US right now. We have a leadership election, a president election in the LDP on September 27. The next president of the LDP will be the prime minister because Mr. Kishida will step down. Will call an election to have this, well, shift this move with a fresh face for the party, getting out of scandals, moving on, having some declarations in terms of reforms for the economy. The Bank of Japan will probably not get into that field by saying, okay, well, cool down, guys. We are hiking interest rates, cooling the economy a bit.
Martin, you touched on that 1% level that the Bank of Japan maybe wants to get rates to ultimately. What is your time frame around that 1% level? And what is your genuine conviction that they can get to that point, given, as you said, the challenges around the economy and inflation dynamics?
Well, the economy is clearly cooling. Inflation is coming down in the longer run, not hurting so much anymore. So there is very little reason from the domestic, pure economy side to move and have higher interest rate. So far, it was about stabilizing the yen, getting it stronger. As long as the yen is not weakening very much again, Mr. Ueda will be very careful. Moving on means going into next year and seeing how optimistic people are becoming about the next government. If they keep spending, if companies keep investing, if that is happening, I think the Bank of Japan can start hiking interest rates early next year again.
OK, Fujitsu Chief Economist Martin Schulz, really fantastic context around the thinking of the BOJ, the political overlay as well as we lead up, of course, to that press conference. The governor will be speaking 7:30 UK time. Thank you for the analysis. There's plenty more coming up. We're going to break down the market rally that we've seen. Fresh records, of course, coming through on Wall Street. Is that rally broadening going to be continuing as well in a lower rate environment, at least when it comes to the Fed and US stocks? We'll break that down for you. Stay with us. This is Bloomberg.
Risks of actually going as far with monetary policy as the Fed seems to think that it will are pretty significant in terms of having an increase in inflation.
OK, former Treasury Secretary, of course, Larry Summers, speaking to Bloomberg's David Weston on Wall Street Week, taking the view that maybe the markets are pricing in too many cuts from the Federal Reserve. The cuts have come. We've had that 50 basis point cut. The expectation, the debate is, do they go 50 again? And the banks, certainly on Wall Street, are divided on that fact. But the fact that rates are now lower from the Federal Reserve has fed into the idea that you can get a broadening out of the rally that's come through. We had a reminder, global stocks, of course, US stocks hitting that fresh record overnight yesterday. Is this going to be a market that broadens out in a lower rate environment? And it's a reminder that in terms of the equal weighted S&P, that index is at its lowest in 15 years relative to the benchmark, and its lowest in 15 years relative to the benchmark. And in terms of the equal weighted S&P price to earnings multiple, roughly in line with its 5-year average, that would indicate there is further to go in terms of broadening out of this market. So let's have a look at the small caps. The Russell 2000 gained yesterday as well. Money has flown into these small caps, but there's an argument that these businesses that, of course, have their exposure to debt and could benefit more from lower rates, that this has further to go as well. Because the long-term view, if you take a long-term view, and this shows that long-term view going all the way back to 2000, you could see that, in fact, valuations are still on the Russell 2000, on these small caps, valuations are still at depressed levels versus the large caps. And then you have the value stocks play. So flip the board and let's have a look at the value stocks situation as well. Because, and this is historical, we're looking back to 1990s, they had the cut in 1995. How do value stocks perform in a soft landing scenario? Again, if we get that. And here's what we've seen. Here's the historical precedent. The likes of healthcare, the likes of staples and financials outperforming technology in that environment. So again, a suggestion, looking back to the 1990s, that this could be a place where you want to be exposed. Again, the caveats are around the labour market and how that performs in the US. The jobless claims came in better than expected, suggesting that maybe the labour market is holding up slightly better than some had expected. The caveat is also, of course, that we get that soft landing scenario. Not guaranteed yet, of course. That is the hope for the Federal Reserve. But nonetheless, a breakdown in terms of what you're thinking about, in terms of the broadening out of this market, small caps, value, and what is still arguably an opportunity to get exposure there. Coming up at 8 a.m. UK time, we're going to speak with Benjamin Melman, Global CIO at Edmund de Rothschild Asset Management. Get his views on how to be thinking about these markets. That exclusive interview is coming up. We'll check in on the futures right now. Bit of a breather coming through across European futures after the gains yesterday. More than 1% upside coming through for European stocks. The Nasdaq rallied around 2.5%. The S&P added around 1.7%. Right now, European futures pointing lower by 0.3%. The FTSE 100 down by 49 points. Retail sales drop. In the next couple of minutes, we'll break those for you live after the Consumer Sentiment Survey dropped to a 2.5-year low here in the UK. DAX futures over in Germany pointing lower by 80 points. And the corporate story of the moment in Germany is, of course, the malaise of the auto market, and specifically today, for the moment at least, Mercedes. More details on that story. The opening trade, though, is up next. This is Bloomberg.